Good morning. Welcome to Friday's Join the Dots. Now this is being recorded on Wednesday, and I tell you that because it's important, because a lot of people who go onto YouTube sites are traders and they want up-to-date, up-to-minute information. I play the long game, and as I've said to you before, my investments are journeys, they're not trades. Okay, I say that because at this point in time on Wednesday morning, gold is 3536, a new all-time high. Silver is 4072, which has broken out from a long spell of being sub 40. And Shanghai is down the last 2 days, having had Bloomberg say it was the most wonderful market in the world just 3 days ago. It's easy if you have the information. It's honestly easy. Now, I said on Thursday the word unexpectedly would be the most popular word coming out of politicians and central banks' mouths for the next probably 2-3 years. And we saw it in the UK. House prices fell in July, unexpectedly. Bond prices rose to a record high, unexpectedly. Political crisis. September the 13th is going to represent a massive moment in the UK's future from here. There will be a public march on September the 13th, and I think we'll be surprised at the numbers. Okay, the political class, the corporate elite, the elite are now, they're failing and they know it. And when they go into failing mode and they realise it, they go into flailing mode. And so the decisions and the reactions become more and more extreme. And we're seeing that across the world. We're seeing it in every major market. And I say market because it affects markets. Okay. Now I've got the Trump piece here, which I wanted you to listen to, and I will link it. Listen to the words. It is very important that the drugs companies justify the success of their various COVID drugs. As if so, we've had 5 years of compulsory vaccinations and they never justified it. Many people think they are a miracle that saved millions of lives, especially the UN, WHO and anyone in the WEF and the elite. Others disagree, with the CDC being ripped apart over this question. Yes, it is. It's being ripped apart, and I've got a great link there to Aaron Siri and how he shows that the health of American children over the last 40 years, okay? In the 1980s, 10% of American children had a chronic disease. Now it's 40%. I kid you not. 40% of US children have a chronic disease, which of course needs drugs, therapy, cash flow. Corporate fascism, medical fascism, fascism everywhere. This is what we're up against, and if you can get that big picture, you can start to understand some of the consequences. What else does Trump say? I want the answer, and I want it now. Yes, you wanted the drug and you wanted it now, which gave him the green light to produce it without testing, didn't you, Trump? Okay. I've been shown information from Pfizer and others that is extraordinary, but they never show the results to the people. No, the people are last. The people don't get the truth. The people get what they're told, as I said the other day. You will do what you are told. Anyway, I'm going to link that piece. Please read it carefully. Read the words. There's a lot going to come from this, and it's going to be macro, I promise you. Okay, and it's not good. So therefore, gold, silver, safe assets. Everything leads to safe assets. Economics, health, medicine, military, everything leads to safety first. So we go on to, I'm going to give you a bang selection of links here. Okay, and I'm going to link them all. So you've got the weekend, have a look. Take some time. Honestly, Rick Rule says you need, if you have stocks, you need an hour a month for each stock. So if you've only got 4 hours in a month, only hold 4 stocks, because that's all you can cope with. That's all you can understand fully enough to make rational decisions. And I agree with that. So here I'm going to give you some links. Take the time over the weekend, find a spare 3-4 hours and just watch all these links and understand the big picture. because you're not going to, no one can stop it. It's going to happen. So why not understand it and prepare? That word, prepare, why not? Okay, so link Kitco, Bert Doman, the first few minutes, the data is a lie. Of course it is. Number 2, Eurodollar University, just the first 5 minutes. You don't have to watch the whole show. You just have to watch the first 5 minutes to pick up the fact of the truth within the construction industry. Okay, now I'm gonna link this because today I got a very interesting and very informative call from someone who really does understand what's happening because he's in the heart of what's going on. Compressors are in a recession. Everyone needs a compressor. Manufacturing, construction, they all need compressors. Compressors are in a recession. Tells you where we're going. And that Eurodollar University talks about that. Redacted. Okay, Redacted. Now I'm turning my page because I've got a whole page on what Redacted say, but I'm going to try and keep it short. It feels like 2008 or worse. Silicon and Sovereign, the first banks that went in 2023, it feels worse. The Fed had 9 trillion on their balance sheet of QE. They've got rid of 3, but they've still got 6. Do you think they can quantitatively tighten into this mess that's going on? I don't think so. Reverse repos are down from 3 trillion now down to 3 billion. 1,000th of their level. The reverse repo went into crisis in late 2019 and up popped COVID 2020 and everyone printed as much money as they wanted. So the temper tantrum of 2019 was there and that was the repo 2019. Okay. So commercial real estate, 700 billion to 1.3 trillion is in distress. Of course it is. Work from home changed it totally, didn't it? Now people are going back to the offices, but now a lot of companies are saying, well, why do we need them back in the office? We were more efficient when they worked from home. So let's leave them at home. Kills the ecosystem around the offices, doesn't it? Shops, transport, etc. Kills it. Jobs go, jobs go, jobs go, jobs go. Get used to that expression, jobs go, because it's coming. Okay, so the community banks are going to be in a real problem because most of commercial real estate is lent by the community banks because they are on the ground in that area and they tend to do those loans and they're very easy, they're very staff light because you can grant 100 million loan using one person for a day's analysis. Whereas if you're dealing with the general public, so community banks are well into commercial real estate. So expect to see a lot of community banks disappear. And then you'll see the big boys come in and take them, of course, or the Fed will invite them to take them. And that's the way the system grows against you. Everything is against you. Okay, so then after Redacted, we go on to Francis Hunt. I'll link it. Long end debt rates. Oh, hello. Francis is there. We're all there. Manico 64's there, Sheckman's there, Manarino's there, everyone's there who's got a brain and is thinking and using it. Long-term rates, I gave you a video the other day, I gave you the charts. The long-term rates are telling the borrowers you can't have cheap money. It's going to get dearer, not cheaper. Don't care if you cut your short rates. The long rate will go up, we don't trust you. We don't trust you to give our money back and we don't trust you to control the economy in the meantime such that getting 4 or 5% is enough compensation for holding your debt for those years. It's not going to be. So the rates will carry on moving up. And that's frightening. China, as I said to you, politicians flail when their economies fail. So what's China doing? It's just slapped on a 20% extra tax on employees. The employer pays it. Is he going to pay it? No, he's going to hire, and I said this the other day in a piece, he's going to hire pensioners because they don't have to pay the tax because it's a social security tax. So they don't have to pay it because they're already on a pension. So what happens to the youth? Well, the youth are unemployed. Where's the prospects in construction, in manufacturing, in unemployed. Central banks still dumping treasuries for gold. This is a Manico 64. I'll send it to you. Okay, the China story was from China Update. Tony, I'll send it to you. Central banks are dumping treasuries for gold. Well, we've known that. We've seen that for 2 years. But those of us who are looking, those who weren't looking, are being told it now. Central banks are dumping treasuries for gold. Yes. So what's the future of the treasury rate and what's the future of the gold price? That's probably a very, very fast pace. Okay, I haven't given you full details of each of those pieces. I really would encourage you to read those or watch those pieces. They're all links on YouTube. And they're all critical to understand the huge picture. Whether it's the Chinese military exercises over Taiwan, whether it's the COVID vaccine truth, whether it's the issues between Iran and Israel and Ukraine and NATO and Russia, it's all happening at the same time. No one can control this. No one can manage this. It's going to have its own life soon. And the only life we can plan for is our own individual life. We can prepare. We can avoid a lot of these pitfalls that are coming if we prepare. If we don't prepare, all we can do afterwards is moan. Okay? So please, have a great weekend. Look at these 6 or 7 links I'm going to link onto this piece. They'll appear in the last page of this presentation. Okay? Please watch them. And please subscribe. Let's get this message out there. Not many people... Do you think anyone is getting this message other than through Join the Dots? No, because they'll see one piece. I'm giving you 7 pieces. And I'm linking them. I'm joining those dots so that you can see the big picture. Most people will see 1 of those pieces or 2 of those pieces. And that doesn't mean you can join the dots. That's this service. This service is bringing you the best out there so that you, like me, can join the dots and prepare. Thank you very much.